This is Wallet Brief, where we break down what actually moved the US economy this week, without the noise. If prices, interest rates, jobs, housing, or taxes are quietly changing your money, this is where you stay informed. Let's get into what really happened this week, and what it means for your wallet. Over the past several months, US households have been navigating a shifting cost environment, especially when it comes to fuel and food. Earlier in the year, gas prices experienced periods of volatility tied to global energy markets, while grocery prices showed a gradual slowdown after earlier spikes. In the weeks leading up to now, those trends began to stabilize somewhat. Gas prices moved within a narrower range, and many food categories showed slower price increases, giving households a brief sense of relief compared to previous months. This week, however, brought renewed movement in both areas. Gas prices in several regions ticked slightly higher, influenced by fluctuations in crude oil markets and seasonal factors as demand begins to shift. At the same time, grocery prices showed mixed changes. Some categories, particularly fresh produce and certain protein items, saw modest increases, while packaged and shelf-stable goods remained relatively steady. Looking at the broader trend, the signal is mixed but leaning slightly upward. Costs are not rising sharply across the board, but there are early signs that price pressures are not fully gone. Instead, they are reappearing in specific categories, creating uneven cost patterns for households. For your wallet, this means everyday spending may start to feel slightly tighter again. A small increase in fuel costs can add up quickly for commuters, delivery workers, and small businesses that rely on transportation. Grocery bills may also reflect these shifts, especially for families that rely on fresh foods. Even modest increases across multiple categories can gradually raise total weekly spending. Many households respond to these conditions by adjusting shopping habits, choosing store brands, buying in bulk, or shifting toward more cost-efficient options. Managing transportation use can also help offset higher fuel expenses. As a broader cultural reference, everyday cost pressures are often reflected across daily life, from commuting routines to grocery shopping habits, showing how closely household decisions are tied to changes in prices. Looking ahead to next week, key indicators to watch include regional gas price updates, energy market movements, and supply conditions for food products. Seasonal changes can also play a role, especially in produce pricing and fuel demand. If these upward movements continue, it could signal renewed pressure on household budgets. If not, the market may return to a more stable pattern. For now, the message is clear. Costs are not surging, but they're not fully settling either. That's your wallet brief for this week. These changes don't always make headlines, but they do change how much you pay, save, and earn. We'll be back next week with